we kind of touched on a little bit too, but like managing the investment, of course, is a big part of keeping them happy, because no matter how much someone likes you, if you lose their investment, they're not going to be too happy and want to invest again. So do you have any suggestions for like how you manage the investment itself so that the investors are consistently happy with their investment?
Well, I think a lot of it has to do with the upfront underwriting in the very beginning, because one of the things that we do that a lot of groups don't do is we have plenty in operating reserves the day we close on the property. So I told you about that one called Braxton Cary Weston that we're raising for right now. And we actually have over 1.7 million in operating reserves day one. Now, some of you might be thinking, well, that's a lot of money. Well, this is not a small deal. So our group only goes after, minimum 20 million upwards to 75 million acquisition. And this one is actually a $57.6 million deal. So we want to make sure we have plenty in operating reserves just in case we need it, right? So it's a kind of a fail safe, if you will, and it allows us to avoid any type of future capital calls. It doesn't completely avoid it. So if we somehow use up the full 1.7, then obviously we would have to do a capital call of some sort. But it allows us to be able to sleep well at night, as well as our investors to sleep well at night, to be able to have that ample operating reserve just in case we need it. And then one of the other things that we do is that our underwriting model does not actually take into account that we are giving that back to the investors at the end. So let's just say if we spend, let's say 500,000. So this is a 5-year hold project. So let's just say we spend $100,000 a year in excess for these operating reserves. So there's random things that happen on the property or whatever, right? I don't think we would need that, but again, this is a large property, $57.6 million over 30 acres. I mean, there's a lot of things that could possibly go wrong. So let's just say we spend $100,000 a year on this, on extra things, right? Well, now we still have 1.2 million that we're going to be able to give back to the investors when we sell the asset, where our underwriting model thinks that we've spent it all. So it allows us to be able to increase the returns because we have that extra cushion in place. And of course, on this particular deal, normally we underwrite for a 7% vacancy during renovation. This one's underwritten for 9%. Normally on this particular size property, it would take us about 12 months because we're only renovating about 50% of the units, because the other 50% have already been renovated by the current owner. And so we're going to be renovating the rest of the units. And so normally it would take us about 12 months, maybe even shorter than that, but we actually increase that to 20 months, right? So there's a lot of things from a underwriting standpoint that you have to mitigate some of that risk and some of that, level of return from that standpoint. And the nice thing about multifamily is that usually you're going to have a split, right, with the operator and the investor. So in our group, we always do a 70-30 split, 70% to the investors, 30% to the operation team, right? To us as the operator. Well, if for some reason we need to give up some of our 30% to make our investors whole, we can do that, right? Because we have that extra cushion built in there as well. So there's a lot of different areas inside of these types of models and these types of assets where we actually have that extra cushion. And the chances of somebody losing money is fairly low. Right now, getting lower return than projected, that's more common, right? But losing money is a lot more rare in this type of situation, unless the property somehow just goes completely defunct and nobody actually manages the property very well and they're completely negligent, right? But they're probably not in business anymore anyway, so that's actually a good thing that the market will snuff those people out as time progresses.